Hello, everyone. I can see people joining the seminar. I'm going to give everyone around 30 seconds so you can find a virtual seats and join us at the table. Familiar faces, well, familiar names rather. Angelica, Anthony, Kate, Adrian. Just giving everyone a few more seconds. Okay. Well, time to start today's seminar. So welcome everyone and welcome to another startup seminar. So as you know, every Wednesday afternoon, come and learn from legends. Today is our season finale, so hopefully it's not going to be dramatic, but rather informative. With us this afternoon, we have a fantastic group of people debating how to fund your business. I'm going to let them introduce themselves in a minute, but thank you so much for joining us. Be sure to use the Q&A button to ask questions. We'll be asking them questions directly towards the end of the seminar. Next week, March, sees the return of the City Spark workshops, so give your startup a workout and come and join us for those 4 amazing workshops that we have in place for City graduates and City University alumni. So it's important that you come to these workshops, particularly if you are planning to apply for City Spark, because the last workshop we're going to be helping you how to write an excellent City Spark application. If you have your phone with you, point to the QR code so that takes you to the registration page. So City Spark Grand Final comes in April. Apply now, I would say. We have 5 awards for the best business ideas from City students, so from a prize pot of 25K. The deadline to apply is the 24th of March at 1 p.m. And again, point the QR codes to take you to the page or just type www.city-spark.co.uk. 24/7 is not 24/7, sadly, but myself and the rest of the team are offering one-to-one support advice to many of you City students or City recent graduates that need help to put your idea and take your idea to business. So book an advice session and we will help to bring your idea to life. Again, point to the QR code and that will take you to the registration page. If you want to find out more about what we do, you can visit cityventures.co.uk or you can email us on cityventures@city.ac.uk. Now, without further ado, let's put your virtual hands together and welcome to the stage Hawaa and the rest of the panelists. Hawaa, are you there? Hawaa, you have to mute yourself first.
Yes, sorry.
Hawaa, good afternoon. How are you doing?
I'm good, thank you very much, Rui.
Hawaa will be our moderator for today, and just a bit of an introduction for Hawaa. Hawaa is the CEO and the co-founder of UnLtd. While studying biomechanical engineering at City, Hawaa and Gina, the other co-founder of UnLtd, applied for several competitions run by City Ventures, by ourselves. So they won people's votes for the City Spark Award back in 2015. So Hawaa herself is one of the recipients of the City Spark Award. The idea is very simple. So everyone hates to go to the dentist. Most of us avoid it like the plague. So these 2 students at City University have come up with a way on checking your dental hygiene from the comfort of your home. Is that right, Hawaa? Did I miss anything?
Yes.
So, Hawaa, so I can get the conversation going with you, and then you can get the conversation going with the rest of the panelists. There's a question that I always like to ask the people that we interview at the seminars. If you were to describe what type of entrepreneur that you are, what would you say? Do you see yourself as a thinker, as a maker, as a fixer? What kind of entrepreneur do you think you are?
I think I'd say a bit of a tinker.
Thinker?
Tinker.
And if you can answer on behalf of Gina, would Gina also be the thinker, the maker, maybe the fixer, a combination of the 3?
A maker, I would say.
A maker, okay, interesting. So yeah, a classic example of you need two brains, but two distinctive brains in order to put the business idea together. Because if you get two thinkers in the same room, that might just stifle your own business. Hawaa, I will leave you now. Well, I will leave you now in the good hands of Hawaa. As always, use the Q&A button to ask questions in return to our panelists. Hawaa, I leave it up to you to now introduce our fantastic group of panelists.
Amazing.
Thank you, and I'll see you on the other side.
Thank you, Rui. So yeah, we can go probably start with each person and have a chance to everyone introduce themselves for those who are attending, so everyone knows who's who and each one's background. So maybe we'll start with Perdie, if that's okay.
Yeah, sure. Hi, everyone. My name is Perdie. I'm the co-founder and CEO of a startup ourselves, but we're called Spice Startups. We run programs that help first-time entrepreneurs and early-stage founders to launch businesses and raise investment. We launched in 2020, and we've supported about 1,000 founders and early-stage startups in the last 18 months through the programs that we run.
Amazing. Pete, would you like to go next?
Yeah, thanks, Hawaa. So I'm the CEO and founder of Greenlit.com, and we're a crowdfunding platform specifically tailored to the creative sector. So we support people trying to raise money for their films or for their music projects, their recorded music, live music projects, and theatre is a big and growing practice. So people are trying to raise money for theatrical productions, and we're moving into gaming at some point this year. So basically creative stuff. We will help you find the finance and build your audience for those things.
Amazing. Sam?
Hello, everyone. I'm Sam, and I'm a funding manager at the moment in Virgin Startup, which is part of the Virgin Group. And they provide startup loan and debt funding to hundreds of entrepreneurs each year, covering all sorts of different sectors, from tech to kind of people selling chocolate bars to all sorts of types of companies. And they provide mentoring and lots of business advice and support. I also run a small business called MYO, which has been running for about 5 years. And it helps adults get creative through arts and crafts workshops. And that's kind of been funded so far through sales, debt, and lots of sweat. So no kind of equity funding. That's me.
And Rhea, I think we're pronouncing you. Hopefully I have pronounced your name correctly.
Yes, you got it, you nailed it. Hi, I'm Rhea. I'm a portfolio manager at UnLtd. UnLtd is a charity that supports hundreds of social entrepreneurs across the UK each year. I personally work in the investment team, so I work with 18 organisations that we've already invested in, but also speak to lots of potential future investees and founders. So I get to spend my days surrounded by people with incredible ideas. I also co-founded a startup, a social enterprise, when I was at university, so bringing sort of those two perspectives. Thank you.
Amazing. So we've got such a nice variety of individuals here, and I think perfect for some of the questions that I've got ready for everyone, so I'm really excited to ask. I'm going to start with one specifically kind of tailored towards Perdie, and then I'm going to move it across, and there's going to be questions for the whole panel as well. So Perdie, your background's obviously in startups. You know, you've done your own, but you're CEO actually of a current company yourself right now. And one of the things I noticed with, or kind of just learned a little bit about, which was Spice Start, was that you obviously work with companies and you tailor the program to support these companies towards success. And I think one of the things I saw about your company, what you do, is it's also companies that investors have invested in. And what I wanted to know as well, because obviously I've been in accelerated programs, and maybe some of the audience are aware of programs like these, and essentially they are, you know, weeks spent, you know, in a program where you're kind of doing workshops, and essentially you're mitigating chances of kind of failure by improving your knowledge and actually kind of, you know, successfully kind of getting through the challenges through learnings and mentors. But with your one, it's very bespoke, and therefore clearly you're working very with each company, and you're designing the program for them. So my question to you is that, can you share the difference this can make to the success of business when the support is bespoke from your experience? And the second question is, if a startup, like if there's someone in the audience who's unable to access something like this and it can't be bespoke, what advice would you give them in order for them to essentially kind of avoid, as things that could kind of, or pitfalls, since they don't have something so tailored?
Yeah, sure. So the reason I can go into a bit more detail into how our business model, because it's slightly different to a traditional accelerator. So traditional accelerators, they will give you a bit of cash up front and they'll get a bit of equity in a startup. And so in order to give cash up front, the accelerator themselves needs to have the cash in order to be able to make that initial investment in companies and then take equity. When we were starting Spice Startups, myself and my co-founder started in the middle of 2020 because we both got made redundant from where we were working before. And so we knew that we wanted to support startups, but we didn't have any money. We just got made redundant. It was the middle of a global pandemic. And so we initially were thinking about starting a more traditional accelerator, but what happened was we got approached by a few people that wanted to hire program managers. So the program manager role, which is what we were both doing before, is someone coming and running a program internally. So a venture capital fund might have their own program or that kind of thing. And so what we said was, rather than us working for you, we will build a program for you. So we have clients, which include Seed Legal's tech space, a company called Codec and others, and we build programs for them to help them engage with the customers that they want to engage with. So it's a bit of a funky business model because Seed Legals, as an example, is a legal tech company and they service startups. And so for them, it's just a marketing route for them to get in touch with as many startups as possible and add value. And so the programs that we then design for them, the scope that they give us is, we want access to as many early stage startups that are fundraising as possible, because what they have as a product is a fundraising tool and the legal tech that goes behind fundraising. And so we then are allowed to pretty much scope out a program that we think fundraising founders will want to go through. And the beauty of it, I guess, from a founder's perspective, is you're not giving away any equity, but on the flip side of that, you don't get access to any funding either. So it's a completely free program and it's open to everyone. And what we've been doing recently is trying to make it a little bit more bespoke. So for example, this week we're running a program specifically for B2C startups. So startups that are selling directly to their customers, they're not selling to businesses. So they've either got a physical product, a drinks brand, or a health and wellness brand or something like that, and they're going straight to the consumer. But we're still doing that with our partners at Seed Legals, which means that we can offer the program completely for free. If you're a founder and you want to get access to the kind of support that we offer, and you're finding a lot of programs and you're too late to start one program and you don't really know where to go or where to get signposted, I'd say there's a ton of forums, community groups, Facebook groups, WhatsApp groups, and so much information on the internet, probably from Spice and Seed Legals and other people in the ecosystem, but also everybody else here, Virgin and UnLtd, that are pushing out content that will help founders who are interested in starting. I'm sure the rest of the panel can talk a bit more about that as well.
Amazing, thank you, Perdie. So then that kind of gives other people in the audience an option to kind of understand, if you have seen accelerators, which we're going to talk about, which is different kind of funding routes. One of them is an accelerator, which is you can get cash, and you give a bit of percentage of your company for a program, or you can probably check out Spice Startups as well as an option as well, because they're not going to give, they're not taking equity, and a lot of accelerated programs don't actually do that. So that's a really good option for some of you out there if you're thinking about it as a route, not funding, but for resources. I'm going to move the next question to Pete. So Pete is someone who's done a few kind of fundraising options. So one of them was bootstrapping, and you may have heard that, and that's the audience, and I'm sure you've covered it in the city startup kind of previous workshops, etc. So obviously bootstrapping is essentially, you spending your own money as little as possible, kind of spending as little as possible to make this business happen. and you have not received any external funds, maybe just a bit here and there from families or friends. So Pete is definitely someone who's done that himself. He got Greenlit into revenue, which basically means he got the company to a point where it was actually making money and breaking even, and therefore he's actually was covering his own company expenses through actually making sales in the company, and that was done without any funding externally. So Pete, we'd love you to kind of tell us a bit about your experience bootstrapping the business, and if you can touch on, you're also doing a round right now, so just kind of giving us a bit of, to the audience, what that actually means when you're now not bootstrapping and raising investment, and then we've got a kind of question to the whole panel about bootstrapping after that.
Yeah, so we sort of came to bootstrapping. I mean, I did quite a deep dive in terms of research and talking to people running similar platforms before we did anything. And one of the figures, and I heard this from basically 3 separate founders of other crowdfunding platforms, and they said, "Oh yeah, our platform cost £1 million to build, and it took a year, 14 months." And I was like, okay, and I heard this not once, not twice, but 3 times. So I thought, well, that's not really going to work for us, because I don't have 12 months, and I certainly don't have £1 million. So I looked at the alternatives, and the alternative, as it was I would sit in my back bedroom with a bunch of open source e-commerce tools, and I'm not exaggerating, a copy of PHP for Dummies, and pull together what was the initial version of our site, and that worked for 18 months. And it was very much an MVP, a minimum viable product, which meant, for us, the technology was secondary. It was always going to be about the market and the community, and gathering trust in the creative community for people to want to bring their projects to us. So we kind of had to balance our limited technology by working very, very hard and talking to people and talking to customers, and not just making them aware of us, but saying, hello, this is us. The website might be a bit scrappy, but we're different. And we were able to sort of get our first project on board, and it literally snowballed. And very, very interesting to hear what Perdie was saying, because I didn't realise that. I can give a massive thumbs up, because the C Legals event program is fantastic. I'll probably do one of those a week. I didn't realise she was behind it. So I would add that another big tool for us in terms of gathering clients was to offer free education material, because it's cost neutral, because I lecture and I have taught at quite a few different places, so we could bootstrap and put good quality, low cost content together that helped facilitate that trust. So that's kind of what we did so far. And the lessons that you learn bootstrapping are just phenomenal, because you can't just spaff money left, right and center. You can't throw money at a problem to solve it. You have to listen, and you kind of have to put your backbone into it. So it's not fun, but on the other hand, you get a much more kind of polished and functional and direct product, and it kind of forces you to be right in the faces and really interfacing with your clients, your community. So that was a massive thing for us. Now we've got to the point where we've built a community. We've backed or supported over 200 projects now, about £750,000 in funding we put together, but for other people's projects. Now we need to, we've identified basically crowdfunding is a bit of a low margin product. So we want to build other products. We've identified the need of the market for them. We've identified the demand. We've identified things with higher margins that we can bring on stream. A whole bunch of other things. We need to scale up. There are certain milestones that we want to hit. So for example, sorry, I'm going a bit here. Certain milestones that we need to hit in order to grow properly and into becoming, a competitor to Indiegogo or to Kickstarter, those kind of things. So now we're out doing a fundraise, right at this moment. I think we're in quite a good position, because any money that comes in goes directly into boosting margins and boosting the bottom line. So that's the reason that it's compelling for us to go out and try and raise it's effectively a seed round, but we've been around a bit longer. So seed in size and a bit later in stage.
Amazing. So in case anyone, I'm not sure, like I said, in the audience, how familiar you are with some of the terms, but when we mean seed, it's usually the size of the company. So when you're raising money, you're either pre-seed, seed, or Series A, Series B, Series C. Usually pre-seed would mean that you've got kind of like a product that's ready to be commercialized, but you're not actually making money, or you've actually got some customer base where you're generating some profit, but you're not actually breaking even. So you're not actually enough to cover the cost of the company that you're spending. And then you've got like Pete's company, Greenlit, who are past that. So they've made customers, they've made money, they cover their expenses, and they're trying to scale now. And therefore you could say they're on the seed stage, and they're making certain revenues a month. And once you get into Series A and Series B, you're making a much larger monthly revenues, and therefore you qualify for kind of approaching a different kind of investors. So that's just to give you a bit of context on that. And when Pete means by margins, and just to give you some context, is he's obviously making money. He wants to actually increase the amount of profit that the company is making, and therefore they're looking at different ways that they can actually make more sales, or kind of sell more items on Greenlit, and therefore make more money. So those are just to give you a bit of background in case some of those terms weren't clear. So that, and I think one of the things I wanted to actually question, and Pete kind of answered, which was the lessons around bootstrapping, and some of us kind of may want to avoid the bootstrapping route because it means it's tough, but honestly, as a lessons and gems from that as a business owner and entrepreneur are incomparable. And I think I want to take that to the panel as well, to kind of ask, the panel has all have had experience. Sam's mentioned he's got a business as well as what he does now, also hasn't been funded, which means he's done a lot of the backbone himself to kind of make it work. And to kind of share to the audience, like, what would you say are kind of, and this can go to everyone, so hopefully we can ask Sam, Rhea, and Perdie to answer this, because I know Pete kind of said his gems on this, which is, what are the cons, what are the pros of bootstrapping versus actually having investment on the get-go for what you're working on, or your business or your startup. Sam, do you want to go first?
Sure. Very good question. I would say, like, a big thing is kind of taking a little step back and just thinking, what do I want this company to be in 5-10 years time? If you want to be the next Google, there's like equity at some stage probably makes more sense, because you don't need to pay it back or anything like that. If I just want a small company, 1, 2, 5, 10 people, it can be a slightly different story. For me personally, when we were setting up MYO, I was afraid of equity funding. I'd heard so many stories, it takes 6 months, 9 months, like you mightn't get it, all these kind of things, and lots of people are very successful. So I was kind of right. I just ruled that out as an option very quickly. And then for us, it was, okay, what do we need to do? We wanted to run creative workshops. For adults, what do we need? We need space, and we need some materials. Okay, we don't have enough money to fit out a big fancy studio. Let's find one and see, can we use it half a night a week? And like kind of think, okay, great, we test it, do that a few times. Can we use it 2 nights a week? Okay, can we get deposits from people to pay in advance? So that'll pay for the equipment and materials. So kind of what can be useful when you're kind of bootstrapping and setting up is just thinking, yeah, what do I need? What do I need over the next quarter that I'm going to be happy with doing? Okay, what do I need to make that happen? And kind of thinking of different pathways for it. The dream for lots of people is, okay, I get £1 million and I can play with it. That's the very small percentage of people get that. And your chances of getting extra funding are increased by being kind of scrappy and figuring out ways to get traction and get going and get customer feedback, which is kind of what we did. Had friends around, then they invited their companies and just grew very organically. And then as we grew, we had more options for debt funding because we had a sales history, and we put in a small amount of funding ourselves, and kind of we worked part-time for the first period. So I won't go on for much longer, but yeah, just kind of, it's important to see, what do I need to do? What resources do I need? How can I think a little bit outside the box to get to that point? And you'll be amazed at what you come up with, like literally writing down 10 options or 10 pathways. Could be the 9th one you write down, makes a lot of sense. It's not necessarily the 2 things that are straight in front of you.
Amazing. Thank you, Sam. Rhea, what would you say to that question?
Yeah, you saw me nodding along quite a lot, that test and learn process, especially with those assumptions. those thoughts you initially have about the people you're about to be working with or providing a service for will probably shift when you're doing these like initial tests and when you're starting, when you're bootstrapping, and having sort of a really dynamic and adaptable structure where you're not answering to other stakeholders, where you have that sort of quick shift time process, just because you have a meeting with, like, maybe you'll be working in a small team at this point, and you can adapt to that and then get that feedback again. Really gives you a good base to learn a lot in those early stages. I know this is about the pros. Could I also bring in one con? And unless this is another question, but UnLtd, obviously we do grants, and a big thing about accessibility to bootstrapping an organization is to be able to fund yourself while you're doing that. So if you don't have a salary for a year, or there isn't an income because you're offering this at a low cost option, or free even, to try and get that feedback immediately. One thing I know a lot of people in the social enterprise sector do, and I'm sure more broadly, is apply for sort of grant funding, which is sort of small pots of money which can sort of keep going quarter to quarter, and also allow for you to buy a couple of resources to run that workshop, or to get that software that you can use. Say you want to use Slack instead of your own app for the first year. Not that you have to pay for Slack, but it's an example for that. So yeah, those are my thoughts on bootstrapping.
Thank you, Rhea. Perdie, what would you say?
To be honest, I think that both of those two covered it pretty well, but they're just echoing some of the things that they said. We speak to, part of the programs that we run is it's all about investment, and we speak to early stage venture capital funds a lot, as well as angel investors. And as Sam said, it's highly unlikely that they're going to give you funding unless you've proved that you've got traction first. And so you kind of don't really have a choice but to bootstrap, unless you've had a business before, or you work at like a unicorn, like, you know, really, really high growth startup or a Google or something. You're not going to get the funding until you've kind of got MVP, like the first product, and you've tested it and you've got some users and there's people that like it. And so you need to find a way and be as creative as possible. Use grants or work part-time whilst you're doing it, or whatever it takes in order to be able to get the trust that you need from the investors to give you funding. And that's, again, if you want to scale it and get a 10x return for the investor, because that's not the right route for everyone.
Yeah,
Just a quick thing on that is around, like, the company that you set up is not going to be where it is in 5-10 years time, and it's like what you want to set up very, like, in the first few months. It's just something that's valuable. And I think, as Pete said, there's so many like websites and platforms and cheap techie tools out there that can make it seem as if you're really sophisticated, and it could be you just like dealing with emails behind the scenes, but it can definitely be very helpful to just kind of patch something together using cheap existing technology. See, does it resonate with potential customers? Does it add value? And before evolving it, like, things that we did at the start, we wouldn't even imagine about doing them now. And I think some people kind of struggle with that a little bit. They want it to be perfect before they kind of test it and get feedback on it, whereas you kind of just have to go out, get feedback, and evolve it. The best way to learn what people want.
Good. Amazing. So yeah, I think that kind of really wraps that question up, was that bootstrapping is difficult. Obviously, even going on to the next point as well, Perdie said as well, it's necessary. One of the reasons why as well, it actually pushes you to ensure that you've got a viable product as well, something that actually generates value. Because if you're in a position where you're literally just got kind of minimal resource around you, if it's not a success, you're going to know very quickly, and therefore you're not going to lose lots and lots of money into it and make that mistake. So essentially, being put in that position, you're not, like I said, investment. We're going to go to the next question. Is investment is difficult to get, and it's even harder now because of the amount of kind of startups and ideas coming out. It's even more important that we're not just kind of coming up with really great ideas, but really actually viable businesses. And what they mean by viable is actually traction. There are people kind of coming to you for what you're providing, whether it's a service, whether it's a product, whether it's an initial kind of product that you're kind of offering. But as long as you're kind of going out there and able to provide something of value, and you're, and if you're exchanging that for money, so people are actually paying you for that, then you're on the right track. Then you're on the right track to have conversations with investors, with individuals who will now think about your business and be like, okay, maybe I want to put some money behind this. And then you can, that's kind of where the conversation, okay, where does your business sit? What kind of investment is suitable for you, etc. And I think another really great point Rhea mentioned as well, every business is different. Some businesses will need, more kind of, trial and error before you get the right kind of value that you give. So you may try one route and you realize, actually, what, people aren't really responding to that, people aren't really interested in it. You try something else, but and then before you find it, and therefore it may take more time. And therefore things like grants and maybe even putting in your own money at the beginning, or working it at the side essentially until it kind of builds or snowballs into something really worth kind of either putting more money into it and more full time. So yes, grants are a really good way, and I definitely utilize those to help with some expenses. So I know we're kind of going towards the Q&A time, but I really do want to touch on these next questions, which is investment, which is it is not easy to get investment, and it can be harder for some companies over others. One of the questions I wanted to kind of share was one of the things I kind of wanted to prod us all on, which is the trends as well, investment as well. So there are certain things that are trending in the investment space. So you can say certain things that are a bit more sexier than others. And obviously, we could potentially kind of say that they could be a factor in, investment and whether you get or not get investment. And also the size of your market as well. So some businesses would obviously be, kind of gearing towards kind of a larger market, and some would towards a smaller market. So kind of the kind of question here is, let me see, where's my question as well. Okay, so when it comes to, you could say, these kind of factors, so whether your company is kind of trending. So right now, I think we could say that anything in the crypto or anything in the AI or digital health is kind of something. But if your company is not there, but it's still generating revenue, it's still looking like a healthy, profitable company, what kind of advice would you give these kind of businesses, you may likely more so experience more no's or kind of not as much interest when you're not in that kind of sexy trending space? How would you advise kind of these kind of founders to go about it, and what mindset to kind of think about? I don't know if anyone wants to volunteer to go first on this one.
Well, I could say something about that. Sorry, I'm not interrupting anyone else, am I? So it's very interesting, because every meetup or festival or conversation I've had in about the last 4 or 5 months has been how NFTs are the future of funding the arts. And I could talk for an hour about how they're really not. But there is a lot of excitement in the creative community because they think it's kind of free, unregulated money that's sloshing around out there. And similarly, not just in America, I mean, some of the crypto companies working in the NFT space are getting crazy valuations, and that's starting to filter over here. So, I'm resisting pretending that we're part of the NFT space. We can do NFTs, we can do them, but it's such a minuscule part of the future of the business. I don't like to press it. So that's an example of how something very fashionable is not working in our favour. What is not going to change, I'd say, what is always fashionable is remember that your investors will be looking for a big exit. So what is your plan to growth, and how can you justify 3x or a 10x or a however many x valuation for your company? Keep your eyes on that one. And solid, substantial growth is much liked as opposed to what's completely in fashion. And I'd also add a characteristic of angel investing, certainly in my experience, is it's absolutely dominated by older white men who have a very conservative mindset toward business, and they are less swayed by, fashion. I have to explain what NFTs are and then why they're rubbish very quickly. So yeah, the depends who you're pitching. VC bros in Silicon Valley will love the NFTs. The white guys at the Angel Network who are retired, they're much more traditional.
I'd actually quite like to jump in and with some of the stats that it's public statistics, which is out there. So Atomico, which is a VC fund, produce a report every year called the State of European Tech. And they look into some of the stats about funding and where the money has gone. And actually, the unsexiest businesses tend to be the businesses that get a lot of funding. So this sounds quite technical, but deep tech B2B SaaS, which is like all acronyms. So when it's business to business, and SaaS is a subscription type of business, so like think about a Spotify or a Netflix where you're paying £10 every month for something, that is the businesses that investors love, because it's easy. They know that they've got recurring revenue every single month coming in. You've got loyalty, you've got buy-in. That's the business model that investors love. And the reason why they love business to business rather than a Netflix where you have to win over hundreds of thousands of people for these subscriptions is because if someone's paying £100,000 every month on the subscription, then you only need like 100 customers and you're making so much money. So investors love that business model. And actually, the companies that you might consider to be the sexier companies, which might be like a Deliveroo or an Uber or a big tech company, and these are the ones that are the success stories. But if you're trying to build that from scratch, you have to win over hundreds and hundreds of thousands of people, and you've got a very low margin business, and investors are actually kind of scared of that. So if you look at the funding from that Atomico report, there's a load of money going into B2B subscription businesses. And we've got American investors coming over, specifically investing in European B2B subscription businesses, because we're the world leaders at this. But it means that the businesses that are business to consumer, so selling direct to consumer, like a Deliveroo or some of these like food delivery platforms, and they're everywhere now, they're the ones that aren't getting funding. And interestingly, we looked at some of the data from the startups that we work with, and 70% of women-led businesses are building business to consumer products, and 60% of men are building to business SaaS products, so that men are more likely to get funded because they're building business models which investors prefer because they're less risky, and because that's what's sexy if you're an investor, rather than the actual business that you're building.
Thank you, Perdie. That was really insightful as well on the side of what is actually kind of hitting the nail on the head for some of these investors, which is essentially kind of goes back to the question is that there are certain things in the investment space that are more interesting than others, and that factors in with how difficult it is to get money. Rhea as well, like what would you say are the other factors or levers that are affecting kind of investment, and then kind of what advice would you give founders?
Yeah, I think what I was going to say is slightly different from what was previously said, which is pretty much that you have such a power and a sway in who you go for your investment. There are a lot of different types of investors out there, and you want one that can bring value to your business, that has expertise in that area. And maybe they're not the VC fund that's funding crypto right now. Maybe they're a family foundation that have funded lots of care sector organizations over the last 10, 20, 50 years. And you can find them, but I would emphasize that you do have to go out and look for them, maybe even before you need that money. Like, start having conversations with those people, booking in chats. Like, we do like to have conversations earlier on and see where you're at, and maybe offer advice even before the investment stage. So even if you're not thinking that your idea is sexy right now, like making sure you don't necessarily speak to the people that aren't looking at that. Like, look for your expertise area and the people that really care and value what you're doing as an organization. That's going to help you in the long run too, because they'll be so invested in your success, and they'll be able to bring other people, other networks, or introduce you to other investors. It's just sort of getting that sort of phrase foot in the door, but like getting that first intro or speaking to someone and sharing that this is your idea and this is where you want to take it. And you have that vision, you'll have probably the data to back it up, or at least you're building that. And from having those early conversations, you can see sort of maybe where your gaps are as well, so what you need to build over the next year to prove that you're ready for investment when you want to grow and scale. So that's what I would say.
Fantastic, thank you, Rhea. Sam, is there anything you want to add?
I guess just on the non kind of equity techie side, so if anyone's out there isn't kind of planning to set up the next Google, and just wants to kind of, set up a smaller kind of business, just there is lots of potential funding options. Startup loans, which is what we do at Virgin Startup. There's the grant funding that's been mentioned. There's friends and family potentially might want to put funds in. There's getting the part-time work that was mentioned. There's getting customers to pay. That's obviously the ideal. That's what everybody wants. And like, don't be afraid if you think you'll add something of value to people to charge them. And kind of, it's a good way to evolve and get feedback as well. And there's other kind of types also, like the competitions. So that's the competitions like that City Ventures are doing. So keep an eye on things that are going on and see, because you can sometimes just spend tons of time trying to chase the equity thing, which will take a long time, or there could be things, just a little pots of funding you can get to get a bit more momentum. And then, as was mentioned already, the more momentum you have, the more likely it is to get the bigger funding later on anyway. So kind of, that's what I'd say.
Amazing. So to kind of round up, it's a tricky one, but there's obviously I think even going back to the most important thing is building something that's viable, building something that's going to make money. And obviously your energies need to, your time will have to be spent on doing that, of course. And therefore, like Sam was saying, it takes a lot of time to kind of raise equity. You don't want it to kind of distract you away from building the actual business and the actual value product, which essentially the idea is that it should lead to funding anyway. If that business is growing and it's heading that direction, it will naturally go in that direction, which will naturally attract the kind of investment that you need according to that business. But the most important thing is that you're working on your business, being smart and wise about the time that you're using to get money that can obviously support the business, running the business, whether it's grants, whether it's the startup loans or competitions, etc. But essentially you still want to be very close to the business and building that versus kind of going away too far, because sometimes that can happen when you're raising money and then you kind of you're not in touch with what really matters. And essentially even as Perdie's kind of mentioned as well, even the Atomica report just goes to show that at the end of the day, these investors were investing in the least risk in the businesses that were making money, and obviously they had to show that and have those proof points. So we don't want, that's the most important thing, is focus on building that, and naturally you will attract funding because you are less risk naturally, because you've built something that tells you, listen, we make money and we've got something that works here. We've got a question from the audience, which I'm going to share to everyone here, which so there seems to be more and more venture money focused on annual recurring revenue based on investing and lending. How would you go about raising capital when you do not expect to make revenue for a year or maybe more? During this time, focusing instead on building customer pipeline or product development. So I'm going to put that out there. I don't know who wants to volunteer to answer that question first.
I'm happy to go first. Just because this came up recently in a session that we did. So it kind of depends, but if you are going for growth, which if you're going for venture VC money, it's likely that you are going for growth. They're actually not that worried at the beginning about revenue. What they want is customer acquisition and customer engagement. So they are likely to give you the money so that you can get the growth and engagement with customers, expecting that revenue will follow. So if that is your strategy and that makes sense as an answer, that's what other VCs are saying. It might be different if you're asking an angel investor, or if you're getting funding from a different route. But if it's VC, then they need to get the returns, so you need the growth.
Yep, that's another thing you're going to find out in this audience, is that depending on the stage of business, depending who you're talking to, your answers will differ, because their the type of investor or their goals is going to reflect on the conversation. So like Perdie was saying, a VC's direction on what he wants is going to be very different to, well, not necessarily very different, but quite different to maybe an angel from a syndicate, or an angel who's an SME business owner. So a small business owner who's mainly looking for SEIS kind of tax, kind of tax relief. Their investment strategy and their kind of risk strategy is very different to a VC. So one of the things, if you're going to take away from this, you're not going to learn this all today, but hopefully as you go through your journey, you're going to start to understand, and this is important for you to know, who is the kind of investor you're talking to, what are they looking for, what's important to them, and do you fit in that? Because you may or may not fit in their in what their criteria is, and that is absolutely okay. Which is what Rhea was saying, is get to know different people. If someone is a right fit for you, even if you're not ready, then keep those communications, and they could be a very great friend, mentor, and then also open up their network to down the line. Another question from the audience is, does anyone else actually want to add to that? Sorry, I didn't ask from the audience from the last question.
Oh yes, I would say this is a very live question for me, because we've got fairly modest revenues, but a clear path to multiplying the value of the company many times. And I think it's possibly a cultural thing as well. Certainly in the US, the question of revenues would be a conversation for 2-3 years down the line. Certainly in my conversations with angel groups, they are obsessed. Is that too strong a word? Perhaps not. They're very, very concentrated on making sure you've got your revenues and margins as well. So again, it's horses for courses. A very different culture over here from what I found in the USA particularly.
What would you say? What's the culture in the USA then?
There's much more of a growth mindset, and kind of what Perdie was saying about the VC mindset, and that kind of trickles down to smaller investors, and that's possibly because the USA has had a bigger technology sector for longer, so the angels are as not quite as conservative or as old or as white as they are in this country. They're much more open-minded. I think that might be the root cause of it. But as I say, over here, there's a lot of small c conservatism to investing, which is perhaps not healthy, but that's the way it is.
That is the way it is. I have heard that before. USA or investors from kind of across the pond are a bit different in their approach and what they kind of look for in a company. So they're not necessarily always looking for your kind of revenues or the annual or their monthly recurring revenues. They're a bit more interested in the bigger picture, and that's kind of how they invest. And they're and it kind of does go back to the cultural approach. Some are, I think, with the Europe or UK, you could say a bit more conservative, so a bit more reserved and kind of, I would say, less risk averse as well in that sense. So, and again, these are factors. So this is important to know, because sometimes you may think that you're the problem, but you're not. Your business is not the problem. Sometimes it's just that you're actually not speaking to the right investors, or maybe they may not be the right fit for you. And so just keep that in mind when you're raising as well. I don't know if anyone else wants to add anything. Sam, you're nodding your head, so you may want to add something, or I think.
Oh yeah, sorry. Yeah, what you say makes sense. I was just going to say, yeah, if you decide that equity funding is the route to go, be prepared for no's, but be persistent. Like, if you think you're getting good feedback from your customers and lots of people will use your product when it's fully evolved, keep persisting. Because I saw a thing the other day, the founder of Design by Night, he kind of set it up a few years ago, he sold it, he's a new business, and he's like still has to meet 70, 80, 90 people. And that's like an entrepreneur who's been there and done it. So like, do be prepared to go on the journey, but you'll pick up loads of insights. There'll be lots of no's potentially, but there'll be lots of, oh, have you considered this? Have you considered that? And you can evolve things. But if you fundamentally believe in what you're doing, you're getting good customer feedback potentially, there's lots of demand, just persist with the journey, and you'll kind of navigate your way through it and find the people who are suitable, as Hawaa was saying.
Amazing. So we've got another question over here, which is, so assuming you've got an MVP that has been proven to be viable and the business has already gained some traction, we don't, from the audience, from the Clarice that you've asked the question, we're not sure what traction you mean, because that will define a lot for who you go to and what's right for you. But your question is, how much equity should a first-time founder offer to an angel VC? Who wants to go first? Rhea, do you want to take this one?
Yes, I was about to say I can't represent angel VCs. That's not actually what we do. But if we were sort of to look at an equity profile and how much would we be looking for at UnLtd, we're talking about this for our new fund. It's sort of bespoke equity. So for each venture, it will be different and dependent on sort of where they're at, but we're looking at around 15%. You do not want to give away, well, I mean, it's up to you, but large amounts of equity in your first round, especially because you might want to raise many times. So you've got your like first stage, but then you'll need more for further growth, and you want to make sure you have enough to still bring people on board, or for other stakeholders to have a say in the conversation about like the future direction of the organization. But it does depend on sort of your own profile and whether you have equity for the staff members at your organization as well, whether that's been part of the deal so far. I definitely advise bringing in sort of external lawyers, no matter what happens, because they will be able to advise on that as well. And I think there'll be more to add from the rest of the panel.
Amazing. Yes, does anyone else want to add on to that one? So just to clarify as well, furthermore, so when she means by traction, Clarice was referring to large customer pipeline and lots of users. So with that extra bit of not context, how much equity should someone in her position be willing to give away or thinking about for VCs or to VCs and angels, on top of what Rhea's also advised? I don't know if anyone else wants to take it. Perdie?
Rhea had the number right there, 15%. You know, more than that, you risk a down round in the future, and it might cause problems for raising, you know, subsequent rounds of investment. So 15% is what you go for. Work out how much money you need, and that is the price of your business. So that's kind of backwards working, but also try not to get sucked into haggling on the valuation of the company, because you're going, you know, your company is going to grow at a very substantial rate, or it's not. And you know, for investors to be haggling over, you know, 5% here or 10% here on the valuation at that stage, it is just a waste of everybody's time, and it doesn't represent a particularly forward-looking investment mindset.
I'm just going to agree, because I think it helps having everybody agree, because it gives you a firm answer. But yeah, I've also heard you kind of go into this first funding round expecting that you might do 3 funding rounds. So you might raise pre-seed, seed, and Series A. It might go on from there. There's dilution and all this other stuff that makes it a bit more complex, but you want to maintain that, you know, you want to make sure that you've got the majority ownership of your company, which means you always have to have over 50% between you or you and your co-founders. And so 15% every round, that's 45%, meaning that you still maintain the majority ownership of your company. So it's good to kind of keep to that figure or around that figure, although you can always try and give away less.
Yeah, and the only thing I'll add to that is you'll find out quickly when you start meeting people. If they go, yeah, I'll give you the money right away, then you go, okay, maybe I'm giving away too much money for what you're offering. But kind of you'll figure out from speaking to people. And similarly, you chat to an investor and they say run away straight away because you're asking for £10 million and valuing your company at hundreds of millions. So you kind of have to, yeah, pick a figure, maybe 150,000, value your company at $1 million, and just go out and speak to people and see what the feedback is like, and then adapt accordingly.
Yeah, I mean, 100%. And as Rhea mentioned as well, which is get some external lawyers as well. That is very helpful. In case you're being kind of accidentally out of inexperience, someone's kind of messing you around, and then you've got someone external to kind of bounce back. It's really, really important, especially in the beginning, just to kind of not go into any mistakes. Have someone advising you, or got some legal backing as well to just navigate that as well. It's can be quite exciting in the beginning if things are going well, so it's always good to double check with that, just in case it's too good to be true if that's happening. Can
I just add one thing from that last question as well? If anybody's been watching Dragon's Den and the way they interact and the way they haggle and the way they value and the way they push for a bigger percentage, forget it. It's a game show. It's not an investment program. It's not a business program. It is an amusing game show. So you will not have conversations or haggles like that. And if you do, run a mile.
Guys, I feel that we could be here for hours, no ends. I have a few questions that I would like to ask, but I'll make it short and concise because we're nearing now the end of our seminar. To begin with, thank you so much for all the amazing insights that you brought to the table. Again, I feel that we could be here for another hour, maybe two, just talking about smart money, the money. Pete was just saying, if you have someone putting a lot of money haggling on the table, just run away because they're probably going to, it's a scam. So my question is more a bit a vanilla question. So what advice would you give to students in the audience, recent graduates, they want to be entrepreneurs. And this is not just about funding, but drawing from your own experience. What are the things that you would probably offer someone that says, hey, I have an idea, I want to do something about this? Anyone?
What I'd say is just get started. You have an idea, great. Like, the idea doesn't really mean anything unless you start doing stuff about it. And what tends to happen, which is really good, and it's hard to believe before doing it, is when you just start doing it intentionally and like trying to add value to the world, things come back. Opportunities pop out. Somebody will say, hey, I really like what you're doing, I'm going to help you out. Or, oh, there's somebody, your friend says, oh, there's this grant funding that might be suitable. So like, commit to it if you think it's a good idea. Tell everybody you know about it and just see what kind of pops in and be open to kind of the possibilities. And then that's just a really good start. And you kind of figure things out as you go. And like, the startup community in general is very helpful. People here are setting up businesses, taking their time to chat to you. Like, people, if you're worried about things, speak to people, message them on LinkedIn, get advice, and you kind of figure things out as you go.
Mm-hmm. Anyone else? Rhea, go.
Happy to go next. Yeah, I think this is something that took me a long time to sort of learn, but there is definitely no one way to be an entrepreneur, and you do not have to be that media representation of an entrepreneur, which is changing, thankfully, but you don't have to be on every single panel getting millions of pounds in seed funding in your first year, and you certainly don't have to look or act one way. I work with so many different people, and they all have their own ways of working. Some might not be public about what they're doing, but they are making the massive growth with their organization in the sector that they're working on. So don't feel that pressure to have like one success story, and certainly know that there is no sort of necessary linear trajectory of success in venture, and make sure you have people around you that will be there for you, because there will be setbacks. It is tough, but if you have an idea, just, yeah, as Sam said, go for it.
Thank you, Rhea. Do you mind telling us what you think? I know that you've been the panelist
No,
today, but I don't want to put you on the spot. But...
that question. I really have to, that was one of the ones I was looking at as the next one. So literally spot on that one. And I'm going to echo everything that Sam said. I love what Rhea said as well, which is there is literally no kind of like, certain way to be an entrepreneur. Like, you just got to do you. And that basically means like the way you work and the way you build your business is going to be quite unique to yourself. But I think the most common thing about any successful business is that it's adding value to someone, and that people are paying for it at a profit. That's essentially what business is. In the most simplest terms, that's what business is. How what you provide, that value is what you build, your brand, how you go about it, that is going to be unique to the business owner. And that's why it's really, really important to just not think about what, how other businesses are doing, or trying to kind of fit into an image of something else. It doesn't really necessarily need to look like that. It's actually most exciting when you're doing it the way you would do it, the way X person would build that business, because that's kind of what will make it, essentially it's, unique self. And just remember always to focus on, why you did it in the beginning and what excites you about it and what are you giving to that person in order for them to feel very happy to pay you for it. And that's the most important thing I would say. But yeah, and like Sam said, go for it. Like, you just got to crack on, like, honestly. And the startup space is amazing in terms of help and advice that you can get access very, very easily. People aren't stingy.
Eddie Ventures.
Yeah, the Ventures are just not stingy with their advice. Sorry, I took up that a long time. That's my fault.
Thank you, Hawaa. As with 2 minutes to go, maybe to finish off on a high. Are there any entrepreneurs, businesses, products, services that you admire, and why? Anyone would take this one?
I'm gonna give a shout out to Seed Legals, not merely for their fantastic product, but also their education program is really, really good. And it's a very, if you are doing fundraising, it is head and shoulders the quickest, cheapest way to get the basis of what you need. You'll probably need a lawyer for the finer details, but Seed Legals is great. That's one thing I'd endorse.
Thank you, Pete. Perdie?
One of my favorite startups is What 3 Words, who have started advertising on TV now. I've seen it, but I saw them at a pitching event years ago, and I love I love what they're doing. I think it's really simple, really innovative, but also they are saving people's lives, you know. And so like the for good element is amazing. If you've not heard of it, just look up what 3 words, but they basically can find your location if you don't have an address, or, you know, you'll get lost in the mountains or something and you're injured, like people can come find you. So the ambulance use it, and other emergency services. It's just such a good business. They've grown really fast. The founder is like a really genuine, nice person, and yeah, shout out to them.
Thank you, Perdie. Rhea, Sam, maybe you're...
I'll say Oddbox, kind of helping to eliminate food waste. They got a startup loan at the very start, so that's why it springs to mind. Yeah, just started very simply with a few boxes locally, and then it's kind of evolved into supplying, yeah, fruits and vegetables, keeping people healthy, reducing food waste. Yeah, so like what 3 words really shows the power of technology, which is great.
Thank you, Sam. Rhea?
Super quick. Biome, for me, I love systemic change that works from like different avenues, and they are a biomanufacturing company that don't just make one thing. They do sort of circular economy. They do service advice for other organizations. They look at how that works in the construction industry. There's this huge like ecosystem vision on the work that they do and how it was based off this PhD, and I just love seeing it grow quite literally and as a business. So yeah, that's
Thank you. Hawaa, we finish off on a high with the moderator telling us the brands, the companies she likes, maybe the entrepreneurs.
I'm going to say probably the most recent one I've kind of come across I've really liked. Someone actually from the lab, I think quite a few businesses from the lab here are actually pretty cool. Seat Launch Lab. Greenlit, I would definitely give a shout out for what they've done with the resources they've have. I think I always kind of find it amazing when companies have really, you know, against all odds, have kind of really pushed to really build something that's valuable and make money out of it as well, like what Pete has done. And then the same for another company here as well, which is Simple Studying. The founder as well, they put in a bit of their kind of own resource initially, but they really kind of really provides value. They really kind of thought about other ways to bring in revenue into the company to kind of fund it without kind of going out and raising money, because they just didn't have the ability and the time to do that, and they weren't getting the yeses at that point either. So I really admire those 2 companies, and yeah, so they're the first 2 really kind of came to mind right now.
Thank you. I think that's just to sum up everything that our panelists and our moderator have been saying. Just do it. A bit like the Nike motto, just do it. Just crack on, be ready to pivot. At this stage, a lot of you can afford to make mistakes, not just mistakes, but to pivot in different directions as you start your entrepreneurial journey. That leaves me to say, thank you very much for the panelists and the moderator. You've been fantastic. I wish that at some point we can do this in person, as restrictions are being alleviated in the UK. To the people that attended, this is our final seminar, sadly, but luckily we'll be uploading the seminars to our YouTube channel, so check it out in the next coming days. And don't forget to check us on cdventures.co.uk if you want to find out more about the things that you do. Again, that leaves me to say thank you. Have a good evening. Stay safe, and see you all very soon. Bye-bye, everyone. Thank you. Bye-bye.
Bye-bye. Best of luck, everyone.
Thank you. Bye-bye.
Bye.